I don't think per the norm, we're officially in a recession, but I do think we will get to that point in 2023. And I think it's going to be one of those scenarios where the Fed is kind of saying, oh, the labor market's still good. This is still good. This is still good. And I really think it's going to be very sudden where we fall off a cliff. If you look at delinquencies in loans, car loans, housing has collapsed. Remember how many jobs houses fuel, building houses. You got plumbers, electricians, builders, roofers. All of these things are just grinding to a halt. And people had a lot of money saved during COVID. So they were saying, okay, well, I'm okay for now, but there will be a cutoff. There will be a cliff dive at some point in 2023.
Bitcoin and crypto will need until at least 2024 to recover from the abuse of unscrupulous players, says one of the industry's best-known names. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing Gareth Soloway updates about Bitcoin's current market standing, the prospects of a final bottom in crypto, and the bear market strategies that should be adopted by novice investors in these times.
I think the FTX scenario, first of all, horrendous for investors that are losing or have lost their money. But I do also think it was the kick in the pants, if you will, that the regulators in Washington needed to get something on the books. When you get that many people to get hurt, and also big money got hurt, which is kind of the first time I would say that institutional money really took it on the chin. And so I think that that's also going to push for regulation. And I think this is going to be the best. I know everyone was against it when crypto was rocking, but this is why you need regulation. You need rules. You need transparency. Otherwise, unfortunately, there's always bad apples that are going to do shady things and end up robbing people. So we get that regulation in the door. And then once you have transparency, big money can actually invest knowing it's somewhat safe, right? It's still the investment. It's still risky investment, but at least they're not going to get their money stolen. So I think that's the key there. It's really a crazy scenario, but I liken it to the Lehman Brothers collapse. The Lehman Brothers collapse in 2008, because again, very similar in Lehman wasn't doing shady, like illegal stuff, but they just over leveraged themselves quite a bit. And again, you have the same sort of kind of panic and sell in the crypto markets that you got back then. And so again, for me, I have it priced in that Bitcoin probably continues lower. Maybe as low as 9,000 is kind of my key target right now. But once it gets there, I think it's going to coincide with regulation coming out. And then I think you actually start to see a move back up in Bitcoin.
Less than 2 months after the FTX meltdown, the repercussions continue to unsettle sentiment and price performance alike. For Marcus, famous for his crypto role at Meta and before that PayPal, bad actors have a lot to answer for, and their specter will remain with the crypto industry beyond 2023. While mentioning FTX only once, he referenced what he called unscrupulous players dragging out market underperformance even beyond next year. We won't exit this crypto winter in 2023, and probably not in 2024 either, he summarized. It'll take a couple of years for the market to recover from the abuse of unscrupulous players and for responsible regulation to come through. Consumer trust is also going to take a few years to rebuild, but ultimately I believe this will prove to be a beneficial reset for legitimate industry players over the long run.
One of my big concerns in my accounts is if someone hacks in and they steal my funds, it's gone technically, and I don't have any recourse about it. Once it's gone, it's gone. And I think the government needs to protect investors in that way. I also think you have to have, regular audits, like a lot of the same things that publicly traded companies have to go through. They have to show the books. They have to have it audited by a legitimate firm. There can be no hiding of assets or anything like that. What are they using? It all has to be revealed. Like if your customer funds are here, how much do they have to keep in reserves to protect the money that's on their books and stuff like, so all of these things would be really positive. I think we do run the risk of seeing the politicians over-regulate a little bit, but I think at the same time, that's a risk that you have to take in the crypto sector. Otherwise, the cryptos, like if you don't get investment, if you don't get regulation, crypto to me is almost like a dead asset, unfortunately. And so it's a big deal. You have to have it because otherwise big money's not coming in and then you're not getting Bitcoin to 100,000. You're not getting it to 1 million and so forth. If you get transparency, I really do believe it can go there. You're exactly right. For me, it is a 2023 bottom. I've priced it out right now where it would be about May or June. And I'm doing that based off of the FTX debacle, matching it with Lehman Brothers. Lehman Brothers, the S&P fell for another 6 months and dropped about 45% from that event. And so if we have that same sort of shock to the system in crypto with FTX, and from that date, 6 months out puts us in May or June of 2023, and 45%ish from approximately when it happened puts us just below 10,000, around that 9,000 marker. Now, there is always the possibility it could go even lower. The worst case would be like 3,500 on Bitcoin, and then it would match up with Amazon's collapse in the .com. Amazon dropped 95% in the .com collapse, and that would put it on par. But that would be like a worst case scenario where regulation doesn't come out. And like, for the most part, I think you will get regulation. And so it will draw in some bigger money at that point at 9,000.
Should hodlers need to wait for their silver linings, this could further disrupt the historical patterns Bitcoin in particular has stuck to throughout its existence. Specifically, its 4-year halving cycles, which tend to produce growth in specific years, may see a challenge. 2024, the year of the next halving, is increasingly tipped to be a period of bullish price action, with some predicting the uptrend starting a year earlier, in Q2 2023. Even if the recovery takes longer than expected, however, Marcus believes that a new and stronger industry will be in place once this happens.
For me, I'm going to pick gold again, and I don't like repeating myself, but if it's going to be the best performer, it's the best performer. I think that in 2023, gold will outperform. My guess is in 2024, Bitcoin will be the best performer. I think the stock market likely is going to be mired in a multi-year recession, so stocks will likely struggle for the next 2 or 3 years. I actually don't even see new all-time highs in the S&P and the NASDAQ probably for 10 to 15 years, which is kind of scary. But remember, you're coming out of this massive liquidity craze. And if you go to the .com collapse, it took the NASDAQ 15 years to make new all-time highs. So it's going to be a swing trader stock market, investors gold market, and then probably eventually a bottom picking Bitcoin market. Investors have to recognize that, the labor market has stayed strong at this point, but I do think that there's a cliff dive coming in that sense. So I do think the Fed will hike at least one more time, probably in early 2023. If we look at the symmetry of their moves, they did a 25 basis point hike, then a 50, then 475s, and they've done a 50. So they're almost coming down the mountainside where it leaves them at least 25 more basis points. I think that one of the reasons why the labor market has stayed so strong is that businesses, and generally small businesses, have been very reluctant to lay people off because it was so hard to find employees, right? So when you struggle to find employees, which is what happened over the last year or two, you're very, hesitant to say, okay, well, the business is slowing right now, so I'm just going to lay everyone off. You say, well, what if it picks up? How am I going to find a good quality employee again? And so I think that's what you're dealing with right now, which is why the labor market has stayed so tough. But I do think there will be a point where even small businesses, and we've seen this, we've seen Meta lay off a ton. We've seen Google announce layoffs. I mean, the big companies that understand business cycles, they are laying off. It's just waiting to come to the small business side. And I think in 2023, we're going to see that. And the Fed will basically stop hiking rates after 1 or 2 more hikes. Now, the key here is that the Fed, because they were off sides and called inflation transitory, and they got behind the curve, they're going to be unbelievably hesitant to lower rates. They're going to hang on and say, listen, we don't want to lower too early. We don't want to create more inflation. And so I think they're going to wait too long to stimulate, and we're going to have a very, very tough recession by the second half of 2023.
Among the most vocal has been investment giant ARK Invest, the CEO of which, Cathie Wood, did not mince her words reacting to the events of nearly 2 months ago. The Bitcoin blockchain didn't skip a beat during the crisis caused by opaque centralized players. No wonder Sam Bankman-Fried didn't like Bitcoin. It's transparent and decentralized. He couldn't control it. A widely circulated tweet stated in mid-December. In terms of price action, meanwhile, opinions continue to diverge over how the first quarter of 2023 might play out. Some believe that the worst of Bitcoin's latest bear market is already over, while others continue to warn of a deeper BTC price dive to $10,000 or lower.
If you're just looking at them bringing down inflation, yeah, I mean, you give them a good mark for that, but you also have to ask yourself, why was inflation such an issue? Could it be that they printed trillions of dollars and had interest rates at zero for so long a period? I would tend to agree. And I think that, it's easy to say, oh, they get a B plus or an A for getting it under control. But it's like, well, they are the ones that created the problem in general in the first place, right? So again, that's a tricky one. But this is the kicker on inflation, is that bringing inflation from 9% down to 5 or 4%, that's the easy work. That's like, if you have to run a mile, maybe the first half, 3/4 of the mile, we're all doing all right. It's the last little bit from 4% to 2% that I think is going to be unbelievably hard to get to. And that's going to make it very hard for the Fed to stimulate in the future. Yeah, so I think each person has to figure out what they're comfortable with. Like, I've been a trader for 20 years. So for me in this market, I'm what I call a swing trader, which means when the markets flush sharply, I buy key technical levels and then I don't stick around too long. I might hold it for a day, a couple days, a couple weeks, but I'm looking to sell into the pop, as in bear markets, we ultimately will go lower. So I think that's one type of investing, but it's not for everyone. Needless to say, if you work a 9 to 5, it's very hard to follow the markets very closely. So I think if you're that type of investor, you start looking for safe assets, right? You kind of move your money into maybe a little bit of gold, a little bit of silver, where in the very least it'll be protected. And I think even gold could give us a return in 2023. And I even think there will be a point where some assets, maybe a very small percentage, can go into Bitcoin when it finally bottoms out. I do anticipate a bottom in 2023, finally, in that asset. Again, how much it goes up from there, we'll have to see. But I think that, again, each person has to kind of think about from themselves. But I definitely wouldn't be like buying every dip right now in Apple or any of these others. Understand that bear markets get uglier, and we're just in probably the beginning stages of it.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.